Alright guys, in this video I'm going to be going over my swing trading strategy. I use 5 different confluences in this: EMAs, support and resistance, trend lines, undercuts, and gaps. I'm going to be going over all 5 of those with examples in this video. Let's get right into it. So the first thing we're going to need to do is set up our charts. So for my EMAs, for my 8 and 20, I use Ripster MTF clouds. Here are my settings, 8 to 9 EMA. Then I use EMA 20, 50, 100, and 200. Over here, these are my settings for it. Make the lines a little bit thicker on these ones. Then I use the indicator gaps, which basically will just mark out gaps in the market from when we gap up or gap down overnight. So those are the 3 things we're going to need to have to be able to get it all set up. Alright, so now we're going to talk about our EMAs, estimated moving average. The 8 EMA is going to be the estimated moving average for the last 8 days. The 20 is going to be for the last 20 days. 50 is going to be for the last 50 days, etc. So a couple of examples here is they act as support and resistance when price comes to them. So as you see right here, NVIDIA has a move up, comes back down to the 8 EMA, rejects off of it, continues to the upside. As you see, this was a beautiful trend. It was riding it the entire way. Let me find another example here. Price comes up, price comes back down to it, to the 20, and holds it as support. Another amazing example is on RKLB. It uses the 200 EMA a lot. Price comes down to the 200 EMA down here, bounces off. Comes down here, bounces off. Comes down here, bounces off. Right now what is happening is we actually bounced one day and then we continued to break it. So we got under there, so we could be looking for more downside potential on it. So another example here is going to be on Oracle. This is going to be using the EMAs as resistance. So as you see, Oracle is in a downtrend right here. Coming down, price comes back up to the 8 EMA, rejects off of it, showing that sellers are still trying to take control of this. What happens? We still continue to the downside. So that's the basics for EMAs. We're always watching for price to break out of them or price to pull back and use them as resistance or support depending on the price direction. So next is going to be support and resistance. Support and resistance is where price has rejected previously or held as support recently. So as you see right here on Apple, we have resistance up here where price rejected. As we see, we can come down to here, all the way over to here. Price broke out of this resistance and continued running. So that is called a breakout. What we do is when resistance is broken out from, it turns into support. So as you see, price broke out here, comes back to this zone, holds our EMA too, and rejects off of these old highs as support. Another example on it here is we had 1 rejection, 2 rejection, 3 rejection, 4 rejection. On the 5th time up here, we broke out of this 317 level and completely ripped from there. So support and resistance is just equal highs and equal lows basically, where price was resisted in the past and then breaks out. Find another example. You can use it down here too. Basic resistance, basic support down here. Rejected down here before, came back down to the zone, rejected, and continued higher from there as well. So next is trend lines. Trend lines are more of an angled support or resistance zone. As you see here on Oracle, price had a move up and is pulling back and creating clear resistance on this downtrend right here. As you see, once price breaks out of the zone, it completely rips up. Another example of that is going to be here on Hood. Hood had a move up, pull back with resistance. Once he broke out right here, we had another move up. Another move we were watching for this week was to break out of this resistance. As you see, sellers did take over, so there was no play in it. Another great example of some resistance to the downside is going to be Tesla here. So Tesla, as you see, we're going to have a low right here, a higher low, another higher low. We can connect these up with the trend line. As you see, this is support on our uptrend. Once this price gets broken right here, we fall to the downside. Another little example right here. You can take it sort of like this. We broke out of this right here, fell to the downside. So use this, you mark them out by creating higher highs and lower lows, whatever way the trend is going. Now we're going to talk about undercuts. Undercut is when old support, which is rejection down at the bottom here, is swept basically. It's sort of taking lying liquidity, lying orders that are left there. So as you see, price had support here on this day. Price came back down. A couple weeks later, came down here, fell under, and then buyers actually stepped back into control and said, we want this area, grabbed anything sitting down here and reversed off of it. That is what an undercut is called. and that is how it looks. All right, so now we're talking about gaps. Gaps are when price jumps up overnight or falls down overnight, creating these big open areas where there is no wick or candle in it. So gaps always like to be filled at some point in time. Not always, but a lot of time they can be good targets for things. So as you see here, Meta had a very big gap up right here in the market and another big gap up right here, and it just continued higher. Then we had this huge gap down. As you see, price came back up to try to fill part of it, and it did. But what happened to these gaps? You see price came down to this one and also came down to this one down here and had beautiful support off of it. And this gap ended up getting filled right here. This gap we had right here, as you can see, compute beautifully, got filled today actually. So you use gaps as some support and resistance sometimes, and also just sometimes targets. If you're in a certain swing trade targeting upside or downside, gaps are always a good target. So now that you know all the terms, you're probably asking, how do I find them? What am I looking for when I'm looking for my trade, for my swing trades? So my favorite swing trades are when you have a stock have a previous move up and then a pullback. So as you see right here, we'll go to hood because these are just some beautiful ones. We did previous move up, back to our EMAs, we wait for some consolidation around our EMAs, draw our trend line, wait for that trend line to break out, and make sure we're above all of our EMAs we're worried about, and we enter in there targeting previous highs. So over here, we could have entered at $86 and targeting these $94. And that's how I do that. Find another example. This is Amazon here. We took this one for a very large trade. We had fallen under all of our EMAs and kind of consolidating here. We were creating a base at the bottom right here as support. We have this beautiful consolidation around our 8 and 20 EMA here. We wait for the breakout. In this scenario, we have EMAs above us. We have our 50, 100, and our 200. So it is a little bit more of a risky trade. We're going to want to get break even on that trade as soon as possible in case we reject off of those and just continue to consolidate. In this case, obviously, it was a beautiful setup and worked out amazing. Oracle, here is an A+ swing trade setup. Previous move up, above all of our EMAs, come back, pull back for 2 weeks or so around our EMAs, then we hold our 8 and our 20, 50, 100, and our 200. So this is amazing. Draw our resistance on our trend line, high, lower high, breakout right here at 95. In this scenario, you can target a little bit higher, so we could have targeted for the top of this gap right here, which would have been 215 with our entry at 195. Now I'm going to use some support and resistance as some setups. So as you can see here, Amazon, as I was saying earlier, old highs that we break out of turn into new support. So we could have been waiting for this pullback right here, have support at 288, this old high, and our 50 EMA. This is a high conviction play. We have two confluences lining up beautifully. We can take this above pre-market high breakout on that day. And we would have got a decent amount of percent out of that. Another setup you could have watched is price falling back down to these highs here. So you see we had to move up, pull back. We can even draw a little trend line on it right here. Break out of this trend line to the upside. But these old highs right here act as support. As you see, price fell back to these to the T and rejected off of them for this amazing run up. For undercut setup, like I showed on Palantir earlier, we have these old lows here, wait for price to come back down. If we do get under them, wait for price to reclaim that zone, get above pre-market high on that day, then we can enter on the breakout. All right, I hope you guys found this video useful. If you guys got any more questions or want to learn any more of my other strategies, you guys can click the link in my bio, join up my free Discord where I also trade live and share all my entries and exits every single day, or check out the other YouTube videos on my channel. But appreciate you guys for watching.